Hello YouTubers, Alaska Prepper here. TGIF to all of you. Happy Friday. I have a lot of news for you today, ladies and gentlemen, and today I'm going to explain to you how it is that the Federal Reserve is going to try to fix inflation with more inflation. Powell will be forced to end QT much sooner than expected. Now, QT is the opposite of quantitative easing. It's quantitative tightening, which is what they're doing right now by increasing the interest rates and by not buying any more assets, or garbage assets is what I like to call it, and trying to sell the assets that they have on their balance sheet out into the market. What does that do? That puts pressure on the economy because there's no more money coming into the economy as easily as it was before. A very quick explanation so you can understand where I'm coming from, for those of you that may not know this, is, for example, do you think that a car dealership will sell more cars or trucks or whatever they sell, right, when there's a low interest rate or when there's a high interest rate? You see, the interest rate is what dictates how much you're going to pay for a loan. So really, when you buy a car or a truck or a house, what you're really buying is you're buying the loan. And the interest rate dictates how much you're going to be paying back on that loan on top of what you borrowed. So the lower the interest rate, which is set by the Fed, the more that people are going to borrow because it's cheaper to borrow that money. It's cheaper to buy that loan. The higher the interest rate, the less that people are going to borrow, meaning that there's going to be less economic activity, just like what's happening now, less economic activity because interest rates are going up. So right now, the Fed is pushing up interest rates. Why? Because they've had interest rates so low for so long that we are now getting inflation, and inflation at a higher rate each month, as you've seen for like the last 6 months or so. It's just higher and higher and higher. And they're saying that, well, inflation is probably going to come down a little bit, but I'm going to show you why inflation is not going to come down a little bit anytime soon. And by the time that it starts coming down, ladies and gentlemen, get ready, because that is when the printing press will be turned on and the economy is going to be flooded with money, i.e. quantitative easing. And here the Federal Reserve is saying that they are lowering their 10-year treasury from 350 basis points, or 3.5%, to 2.75%, all right, for the year 2022. So they were estimating that the 10-year would be up to 350 by the end of 2022, and now they're saying no, it's not going to go above 2.75. All right, so right there, they're saying that they're not going to be as aggressive in raising interest rates as they had stated in the past. And they say that by 2023, they're lowering their expectations from 3.25% to 2.50. What does that tell you? That tells you that if they had already predicted or said that they were going to have rates at 2.50 by the end of 2023, from 2.75 by the end of 2022, it means that they were already thinking about lowering rates, which does what? It makes borrowing easier, putting more money into the economy, therefore creating more inflation. I've stated in the past that we were going to have a deflationary crash, which is what we're going into. We're starting it right now. We're going into a recession. It's going to get so bad that the Federal Reserve is going to have no choice but to bring down interest rates, just as they stated right here. And then when they do that, it's going to get more inflationary than it is right now. Inflation only has one way to go for the near future, and I'm thinking probably for the next several years. And that is up, ladies and gentlemen. We may see a small downtick here or there, but that's going to do nothing. And I can tell you right now that inflation next month and the month after, to me, doesn't look good. And this is why. It's something that we've talked about before, the Producer Price Index. And what is the PPI? The PPI is what it costs producer. It's like the inflation for producers, for manufacturers. So in April, I believe it was, or May, the PPI was 11%, right? And we ended up getting a print of CPI in June of 9.1%, which tells me that producers or manufacturers are actually taking a little bit of a hit in order not to have to raise their prices so high that their customers would stop buying what they're selling. The producer price index for final demand increased 1.1% in June, right? In June. Now remember, the CPI increased by 9.1%. The PPI increased by 1.1% just in June, which gave us an increase of 11.6% year over year, or 11.3% year over year, not 0.6, 11.3% year over year. So if they had an 11.3% increase in what it costs for their overhead, for them to produce their gadgets or whatever they're manufacturing or producing, then do you think that that inflation on the manufacturer will eventually catch up with us, Joe in the street? It has to, because eventually they're not going to be able to eat that cost anymore. So inflation, in my opinion, has not peaked. Is going to continue to go up month over month. If you see a little tick downward, then that just means that they're going to push it forward to the future, because eventually manufacturers will have to push that cost to the consumer, or what happens? They go out of business. Once you see that the Federal Reserve starts cutting interest rates, you better hold on to your trousers, because this is nothing. As far as inflation goes, this is nothing compared to what's coming in the future. Now, I'm not trying to scare you, ladies and gentlemen. I'm just trying to prepare you for what's coming up ahead, because what I'm going to show you right now is nothing compared to what we're going to see in the future. The inflation monster that our representatives have created is voraciously eating away at our standard of living. If you remember me saying that our standard of living, after everything is said and done, if our rulers get their way, will be reduced to about 25% of what it is now. And when I say our standard of living, I mean like Western nations, nations that are developed, like the United States, Europe, Australia, nations like that are first and second world nations. And I can go over all of the numbers with you: 59% for gas, electricity 13%, food at home 12%, etc., etc. Ladies and gentlemen, these numbers are going to be nothing compared to what we see when the Fed finally realizes that it has to lower interest rates, because it's pushing us into a deflationary depression, which is the worst thing for the Fed and the government, is a deflationary depression. They're going to go ahead and inflate their way out of debt, which never works out for you and I, the average citizen. And listen to this. This is how this is going to impact you. It's going to be a lot worse than what it is now. Energy prices are trickling down into everything, and American families are being crushed. And we can all agree on that. Real hourly earnings decreased 3.6% from June 2021 to June 2022. As I've stated 1,000 times, inflation only hurts the working person, the person that's out there earning a wage or a salary, because your earnings never keep up with inflation. All right, ladies and gentlemen, that's something that you have to understand whenever they get in front of a teleprompter and say, yes, we're going to send you some more stimmies. You will end up paying for that stimulus check that you received, a couple of years ago, 10 times over, with the real earnings that you bring home being able to buy less and less. Even though you're earning more, you can buy less, and that's because of inflation. The change in real average hourly earnings, combined with a decrease of 0.9% in the average work week, resulted in a 4.4% decrease in real average weekly earnings over this period. What does that mean? That means that if you earned $500 last year per week, and you're earning $500 this year per week, the purchasing power of that $500 that you're earning this year per week is 4.4% less than what it was last year, which is a catastrophic $3,400 in some people's food budget for a year. That's just on their food budget, okay? That's just on the food budget, $3,400. Go ahead and add heating to that, add rent, add medical cost inflation. Go ahead and add fuel, gasoline. Add that stuff, ladies and gentlemen, and you are paying a lot more with a lot less. But they say the good news, if that's what you want to call it, is that the inflation rate will probably subside just a bit during the next few months. And as the Fed has stated in our first article, they said that they're not going to go above this number for interest rates, and it will subside a little bit. But when it subsides, ladies and gentlemen, there will be more demand, because there will be cheaper money for people to use and people to borrow in the economy. This is a criminal organization, in my opinion, that has not your interest in mind. The interest of the Federal Reserve is to take care of the banks that are under them. They do not have the American people's interest in mind. The only interest that they have is themselves and, of course, the government, the politicians. And for those of you that don't understand when I say the money supply, like the money that's in the economy, it's called the M1 or M2 money by the Federal Reserve. And here, let's go ahead and read real quick. The money supply is the total amount of money, cash, coins, balances in bank accounts in circulation. So even the coins that you have in your pocket, the cash that you have in your pocket, the savings that you have in the bank, and all that stuff is part of the M1 money supply. Here it says the M1 is the sum of currency held by the public and transaction deposits at depository institutions, banks, which are financial institutions that obtain their funds mainly through deposits from the public, such as commercial banks, savings and loans associations, savings banks, and credit unions. So that's the M1 money supply, ladies and gentlemen. Why is the M1 money supply so important? This is why. Because the more money that there is in the economy, the more money that is chasing the same or lesser amount of goods. And with the supply chain crisis that we've been having here in the last couple of years, there's been less goods, but more money put into the system. So the more money that there is in the economy, the more that things are going to cost. Here's a graph that you ought to be familiar with. And it tells you how much money there is out there that people can use to purchase goods or services. I'm going to go ahead and direct you to over here. Right around April of 2020. Remember, April of 2020 is when all of this mayhem started with all of these ridiculous regulations and mandates that the government's put forth. So April of 2020, there was about $4.8 trillion out there floating around in M1. And I just explained to you what M1 is. Now take a look at where we are now. Right now, we are at just shy of $21 trillion. This only goes to May because they haven't updated it yet, but you get the gist of what I'm getting at. We were at, let's say, 5 trillion, and now we're at 20 trillion, let's say. That is a threefold increase in the money supply. 300% more on top of what we started with in April of 2020 do we have now in May of 2022. More money than we've ever created in our entire history, meaning that up to this point in our history, up to April of 2020 in our history, we had $5 trillion in our economy going all the way back. That's the most we've ever had in our economy, going all the way back to the founding of our nation. And in just 2 years, we printed an additional 75 to 80% more money than had ever existed. And you wonder why inflation is what it is? And why inflation is going to get even worse. Because all of this money that you see here, that $15 trillion that we printed, that's in our economy. That's not talking about the money that we printed that we've sent overseas. But this money that we printed that is in our economy, it has not all caught up to our inflation yet. The inflation that you're seeing now, in my opinion, is maybe 1/5 of this amount. And this will eventually catch up. Think about this. When you have stocks, the stock market go down, cryptocurrencies go down, gold, whatever goes down, where does that money go? And when I say money, I mean fiat currency. Where does that money go? It has to go somewhere. Well, some people take it and turn it into gold. Some people take it and just take it out of the bank and put it, under their mattress. But a lot of people take it and spend it. So the more money that there is out there that can be spent, the higher that inflation is going to be, because eventually people are going to wake up to the fact that their cash is trash, and they're going to start trading it in for whatever they can get that has any kind of tangible value to it, anything that they can hold in their hand. And this is what's going to happen. It's going to happen here in the United States. Protests and strikes in Panama growing despite the government's cap on gas prices. This is going to happen here in the United States. Just like what happened in Sri Lanka, what's happening in governments all over the world. The people will have had enough. The question is, are you going to be ready before something like this happens here? Because if you're ready before it happens here, then you're not going to have to go out there and be with the masses that were not prepared. If you are prepared now, you're not going to have to go ahead and compete against those that were not prepared, that are panic shopping, that are waiting in lines that are a mile long to get gasoline, etc. Another thing that's going to happen here, just like it says on the title, government's cap on gas prices, is that the government, when inflation gets bad enough, and I don't think it's going to be right now, I think it's going to be when the Federal Reserve starts to lower interest rates again and inflation is really going to take off. When it gets bad enough, the government is going to put price caps on things, price controls. When that happens, ladies and gentlemen, it's not going to matter how much money you have, all right? Because you're just not going to be able to find things, because price controls never work. All they do is create scarcity, create a thriving black market, because that lower price will no longer exist. That lower price may be on the shelves, but there won't be any product behind it. A black market always arises when governments put forth price controls. Why? Because price controls don't work. It always produces scarcity. All right, ladies and gentlemen, let's get on to some good news. I actually have a couple of good ones for you today. This is great. I love this story because I love to leave big tips whenever I can. Bartender stunned after anonymous guest leaves a $4,000 tip. She says, "I didn't believe it." And I'm not telling you to go out there and leave a $4,000 tip, but what I'm telling you is be kind to your servers. There's been a couple of times when we've gotten terrible service. Like we went to a restaurant here a while back and the service was terrible. Right? And my wife says, "Man, the service is terrible today." So I looked around. I was like, well, look at this. This is what's happening. This poor waitress, she's on her own. She's got this entire section by herself. They're short-staffed is what it is. It's what I thought. Right? I said, we're short-staffed. I said, so let's go ahead and take care of her. That way she has a good day. Because she's already having a bad day. And I could tell by how hard she was working, trying to keep up, forgetting stuff. Like she forgot a few things. She couldn't come and get refills as often as normal. But you have to understand that, ladies and gentlemen. So be kind to your servers. She said that their bill only came to $179. However, the woman who offered to buy drinks for the entire bar left a much bigger tip than the usual 20%. She tipped Belle $1,000 and did not stop there. And the waitress says, "I didn't believe it until it went through the credit card machine, and she still didn't believe it until it actually hit her bank account." So that's awesome. And I saved the best one for last, in my opinion. A 15-year-old decides his town needed a veterans memorial, and he raised $77,000 and built one. And this is what the memorial looks like right here. And of course, you know how difficult it is for towns or townships to come up with money to do this or justify doing things like this. But you know what? In my opinion, I think he did a great job, because I think it is up to the people of a town. It is up to the people of a city to say, hey, let's get together and do something that brings value, that brings cultural value to our city. It shouldn't be up to the people that are managing the city. Yes, they work for you, and yes, they collect your tax dollars. But as long as they're using those tax dollars the right way, which I know you're going to say they never do. And in my opinion, that's true. They don't use the tax dollars the best way that they possibly can in the most efficient manner. But I think it's even more important for the people to say, hey, let's get together and let's do something that's going to add value to the culture of our city that we love. And I think this is a pretty awesome thing. All right, ladies and gentlemen, I hope you got something out of this today. Moral of the story, you better get ready for higher inflation, because the Fed is going to end up fighting inflation, in my opinion, with inflation. And it's going to last for quite a while. So what you get today and put up is going to be a lot more expensive a year, 2 years from now. And it's going to cost you more of your labor a year, 2 years from now than it does today. Having said that, have a great day. I hope to see you all during today's live stream at 2 p.m. Alaska time, 6 p.m. Eastern time. Again, TGIF. I hope you've all had a great week. Remember to be good to each other. When good people do good things happen. Remember to reach one, teach one, and repeat. If we all did this, the world would be a better place, and you know that it will be a better place. Many blessings to all of you and your families. I'm Alaska Prepper. I'm out. God bless. All right, so for the bonus clip of the day. So let me tell you why I sign out or sign off before we do the bonus clip of the day, is because I can't do this every single day, because sometimes the market's not open. It just happened to open a few minutes ago. It's about 5:42 a.m. my time, which is 9:42 a.m. Eastern time. And sometimes I may have this video done before the markets open. And also I want to say goodbye and have a good day to those that maybe don't want to see this part of the video. So ladies and gentlemen, yesterday we had a miracle on Wall Street. Yesterday we were down. The market was crashing. Everything was crashing yesterday. And all of a sudden, out of nowhere, the market just ended up having a good day, or a much better day than it was having. So that's just a miracle on Wall Street, and you'll see that happening. However, what I see here in this chart is I see a downtrend. I see a downtrend, and I don't think that there's too much that the Fed can do about it. They can go out there and buy all the stocks they want. And for those who may say the Federal Reserve doesn't buy any stocks, trust me, they buy stocks. My opinion, but they buy stocks. Why would they have a trading desk? Why would the Federal Reserve have a trading desk if they don't buy stocks? Remember that in nature, you can manipulate something until you can no longer manipulate that something. So right now, the Dow is at just shy of 31,000 points. Man, I'll tell you what, buy the dip, ladies and gentlemen. Just kidding, I'm not a financial advisor. The NASDAQ is sitting at just shy of 12,000 points, 11,955. The S&P 500, same thing, 3,837 points. The dollar, man, I'll tell you what, the dollar makes moves nowadays. It used to be that the dollar almost never moved, that if it moved up, it was maybe 1 or 2 basis points, and a really big day would be like 10 basis points, which is the equivalent of about 1/10 of 1%, right? But now look at this. It's moved down 32 basis points, 1/3 of 1%. That is huge. In the past, that used to be huge, but look at this. Look at this day right here. This day has started at 105, and it went all the way up to 106.5. 1.5 percentage points is huge. A huge move in the dollar, whether it be up or down. That tells me that it's a lot more volatile, and it will be more volatile going forward, but I think it's going to continue to go up until the Fed starts to go down with interest rates. And then, ladies and gentlemen, you're going to see it plummet. Oil is at 97.59. The 10-year bond is at 2.96. The 30-year is at 3.1. Gold, look at gold. Oh my goodness. When I see this, I do not get upset. I'm like, this is so awesome. Gold is on sale. $1,705. But take a look at the premium. Take a look at the premium for gold and silver. See if you can get gold for $1,705. This is nothing but the paper price, which is a fake price. Silver is at $18.45. Platinum, $845. Platinum is starting to sound good to me because platinum is pretty cheap right now at $845. But the premium, ladies and gentlemen, is what really gets you. You see, the premium, for those of you that don't understand what the premium on a metal is, actually everything has a premium. Everything that you purchase has a premium on it. The spot price is what it costs to manufacture or to pull that metal from the ground. So let's say the spot price of a can of beans, right, is what it costs for the manufacturer to actually get those beans in the can. That's what it costs. The premium that is added to that, the price on top, or the dollar amount on top of what it costs to manufacturers to make that product, gives it what is called mobility. It allows it to move from the manufacturer to the store shelf so that you can buy it. That's the premium. Without a premium there, you would not be able to buy the physical. You can buy the paper, but you can't buy the physical and hold it in your hand. Right? So the same thing with a can of beans, same thing with gold. The paper price for gold is the derivative price, which works the opposite of the way that it should work. A derivative should be based on the price of the physical. And with gold and silver, they switched it around in order to fleece the American people and the people of the world, actually. With gold and silver, the spot price of the physical metal works off of the fake price of the paper, of what they have in paper in the market. I hope you understand that. So the more paper that there is in the market saying that there's more silver or gold in the market, the lesser that the price gets. All right. And that's what they base the spot price of the physical metal on. It should be the opposite way. So in order to combat that, in order to give gold and silver mobility, to get it from the miner all the way to the coin shop or to SD Bullion, let's say, online dealers, they have to put a premium on it. And the more demand that there is on that metal, the higher that the premium is going to be, because there's going to be less of that metal in the market to sell, in physical form, that is. Having said that, have a great day, ladies and gentlemen. Thank you for sticking till the end if you're still here. God bless.